Everybody, Al Abaroa with Financial Intelligence Training. It's Wednesday, it's August 8th, it's 2018. I'd like to start today's post with a special birthday wish to my colleague Josh Chase, who's working hard on his birthday in the Fort Lauderdale office. Josh, we appreciate all your efforts. Thanks, buddy. Enjoy your day. All right, so as you can tell, I am not in Fort Lauderdale, but I am here in Chicago, and I am standing in front of the Federal Reserve Bank. Why? Because today we're going to discuss the dollar. Now, on January 25th, one day before the S&P got shellacked and began its 10% decline, we saw the dollar find its bottom after a one-year slump. Take a look at the symbol UUP. That's up, a fitting name for today's move in the currency. Now, after you look at that chart, take a look at the April 26th move, which saw the currency leap above its 200-day moving average and get itself right back in the neighborhood where it spent 315 days in a flat base back in 2015. So why do we care about this? Because the subsequent move in the dollar has put an enormous amount of pressure on commodity prices, resulting in some rather substantial trends. Granted, they were downtrends, but trends just the same. This highlights the importance of understanding how the shorting mechanism works and why one may consider using that within their financial plan. Not necessarily to short commodities, but how about if the the S&P or equities get pressured and they start slumping? How about if interest rates continue their rise, subsequently putting pressure on bond prices? I mean, after all, this week we did have a major CEO of an investment bank come out and say there's a good case for treasuries trading at 5%. Now, on that subject matter, if you think about the ups and downs in the markets, it's a very good reminder to understand that shorting can play an important role. Now, before you run out and start shorting things, let's understand that there is an inherent risk in shorting positions. Just ask any of the 34 million shares that were outstanding in yesterday's Tesla short squeeze, which saw that stock jump up 11%. Now, they say 50 million Elvis fans can't be wrong. Well, it sounds to me like Tesla fans were 16 million shy of that mark. Now, kidding aside, let's go back to the dollar. With the dollar approaching key resistance, all eyes this week should be focused on Friday's release of the CPI data, giving us an important indication of what inflation figures will look like and subsequently what kind of pressure that may put on the dollar and the subsequent trends that have resulted. Stay tuned for that, guys, and if you're trading stock and stock options, remember, it involves a substantial degree of risk. It's not suitable for all investors. If you love the charts like we do, past performance is not necessarily indicative of future results. I'm Al Abaroa, Financial Intelligence Training. Thanks very much.